Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Josh Stein. He's the CEO of Harbor. Josh, it's great to have you back with me at MarketSite. Now, just remind everyone, tell us about Harbor. You've been on with me, a number of times. How is the company applying blockchain technology with private securities?
Sure. So Harbor is a platform plus a protocol using blockchain technology in order to unlock liquidity in private securities. Essentially, we're taking private placements that today exist only on paper and we're digitizing them. You can think of it as a transition from a written letter to email. By making these things digital or tokens, it allows you to unlock liquidity and reduce friction to trading and other investment opportunities.
All right, now you're in town for Consensus, and I've heard that you have a big announcement to make. Can you fill us in on that?
Sure, so it's the public launch of the Harbor platform with our first deal, a tokenized real estate offering. It is the hub at Columbia REIT. We are tokenizing shares in a single asset private REIT that has the equity in a building offered by DRW, Convexity, a DRW real estate company.
Okay, so what does it mean to tokenize the equity in a property like Hub at Columbia, for example, and what does that offer to investors?
Sure, so today, shares in private REITs, LP interests in private funds, those securities exist on paper, and so the trading of them has a lot of friction. When you tokenize them or digitize them, you plug into a larger digital ecosystem that allows you to unlock liquidity, to reduce those frictions to trading. You can think of it as, again, as a transition from a written letter to email. The content is the same, the content of the security, your security interest is the same, but it's faster, cheaper, and easier by orders of magnitude to trade it. You can send or trade that security as easy as sending an email.
How's it different than REITs that are publicly available?
So public REITs today are really large baskets of properties. This is a single asset, it's a single building. And what becomes really interesting is a world in which you start to tokenize large numbers of single buildings. You can now combine them in interesting ways. You can create baskets by neighborhood or by area. So for instance, you could create a basket of security tokens representing downtown Class A office buildings right here in Manhattan. You don't have the ability to do that kind of targeted investment today at a lower check size with liquidity.
All right, now Convexity Partners is the property owner. What's in it for them?
For them, they get to raise more capital more quickly at a lower cost of capital. By syndicating more widely, you bring the check size down. By allowing for liquidity, investors value that, and all of that allows the asset owner to raise more capital more quickly at a lower cost of capital.
Now, how's Harbor, how are you navigating the regulatory landscape? Because there has been some news out there in terms of token offerings. How are you managing this?
Sure, so Harbor's very different than some of the things you read about. There were a lot of blockchain companies where it wasn't clear whether the token they were offering was a security. That's not true at Harbor. Everything we do is traditional private securities, so the rules are very clear. Harbor's job is to enforce all those rules. That's what allows these digitized securities to trade more freely. Is Harbor's in the background checking every trade,
right,
making sure it's compliant every single time.
All right, and where can we get more information about Harbor?
Harbor.com.
All right, sounds good. Thanks so much for being back with me in studio, Josh. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.